Hey guys, you've tuned into Money Control, and we're talking about crude oil prices right now, where the Indian crude basket is now trading at a 6 week highs. If you look at global crude prices, we are trading at a 5 to 6 week highs here as well. Well, last week was a 15% jump up in case of crude oil prices. This was the best weekly gain that we have seen in 8 months come in for the crude oil prices. Well, for Indian markets, it's of quite important because we import 85% of our crude requirement, and because you have to pay back for this crude is the reason you have seen the rupee hit another all-time lows as well today. For rupee, it clearly has been about the dollar index strength and the US Treasury yields as well, but it is crude prices in a big way that do impact other asset classes and the Indian rupee in return. Well, the OPEC and allies cutting production by 2 million barrels per day was almost double of what the street was expecting. 1.1 is what we will see actual, because in any case OPEC is not producing as per the quota. So when you look at the global inventories or a deficit right now, we are in a deficit of already 2.5 million barrels per day, and that clearly has been supportive for the crude prices. So much so that in last 10 days itself, we have seen prices rebound from a low of $82 per barrel in case of Brent prices to almost $98 per barrel in the day early day today. So well, there has been a lot of run up that we've seen in case of crude oil prices. What the markets are reacting to right now is the Chinese service data, which has come in on the weaker side. But this is a very data heavy week yet again. You have US inflation numbers coming in, you have Chinese inflation numbers coming in, you have China trade data also in this week itself. So the markets will react to all of that. The US non farm payroll data on the stronger side has impacted the US dollar index, which is trading at 113. So that is what is also weighing onto the markets right now. But the fact that you could be looking at yet another aggressive rate hike because of the kind of data that we have seen come in from US also seems to be holding the crude prices, but not in the way that you would expect or how we have seen it in the recent few days. So that tells you that crude is now getting stronger on charts. It's more closer to 100 than to 80, as was the case a week ago. So it is buying on every decline that you see in case of crude prices coming in as a strategy for the very near term. We have seen strong reports come in from Citi, from Goldman Sachs, from Macquarie, who do feel that the crude prices will be higher when the time this year ends from where we are trading right now. So, well, yes, there is some still bullishness continuing there. Chinese demand seems to be coming back. Remember, they are back from their 1 week holidays, and the markets also are looking at a stronger demand continuing in Europe. We are just entering into the winter season very soon, so there is going to be a strong demand. So this is going to be a quarter that you wouldn't see too many people going short when it comes to energy. So whether it's natural gas or crude oil prices, this is a season that you see most people going long onto that sector.